Welcome to Mortgage Markets and More. I'm your host, Peter D'Angelo. Welcome to Monday, everyone. We've got your mortgage rate update here. It's been a little bit of a rocky road, so to speak, and we're going to just dive right in, get down to it, so that we can make sure we're setting up the week for success for all of you who are out there looking to buy a home or helping your clients in trying to find the right home. We talk most Mondays now about the 10-year Treasury bond. And again, the reason being the 10-year Treasury bond is closely tied to where the 30-year fixed rate mortgage goes. So if that increases, then mortgage rates increase. They're highly correlated to one another. Last week, we saw that 10-year bond tick up to 4.36%, and that's up from 4.2% the week prior, and that translated to higher interest rates last week. If you recall, we were talking about hopefully seeing that 10-year Treasury bond start to get closer to 4%, and then we'd see some relief for the mortgage rates, but that's not happening. At one point last week, it went as high as 4.42%, which really would have changed how high and how much further mortgage rates would have gone upward. But for our purposes right now, they're staying within a particular margin, and the reason for this change in the 10-year Treasury, which now translates to higher mortgage rates, was due to economic data that was released last week. We won't go too far into the weeds. It's sufficient to say that it shows that the economy is strong. It's wild. Right now, it's like good news is bad news. We'd love to see a strong economy, absolutely. But when we've got inflation and we're trying to get that down to the 2% target that the Federal Reserve has made mention of ad nauseum at this point. If the economy is strong, then one, they have less of a case to cut interest rates, because if they cut interest rates, that stimulates the economy. And number two, if the economy is strong, that means inflation is going to persist because prices will stay elevated. And if people are making more money, wage gains was part of that data last week, job openings, job turnovers, Labor Department issued their statistics, things are strong there. So if people are making more money, people are gainfully employed in some respects, now that's going to keep prices high because people will continue to buy while prices are high, making inflation even more difficult to reduce. All that to say, Federal Chairman Jerome Powell did make mention last week that even with the news of the stronger and expanding economy and resilient economy that we're seeing, they're staying the course, and they believe that it will be appropriate for there to be a rate cut. The timing of that cut is still yet to be determined. There are a number of different perspectives on that. My personal perspective is that we're probably not going to see a rate cut, not for a little bit, maybe toward the end of this year at this point, just because inflation is showing to be persisting and very sticky. So all that to get us prepared for the 30-year fixed rate mortgage and what mortgage rates look like as of last week. Again, these are the averages as published by Mortgage News Daily, which is an online website that aggregates many lenders across the country and what rates are being posted. So the 30-year fixed rate mortgage for conventional financing averages just above 7%, 7.01%. The 30-year FHA mortgage was averaging at 6.45%. The 30-year jumbo saw a slight tick up from already an elevated level to 7.32%. The 15-year fixed rate mortgage was at 6.45%. And the 7.6 secured overnight funding rate adjustable rate mortgage was at 6.75%. So we've seen everything come up just a touch over the past week compared to where we were last. And I wanted to highlight these increases because it's really important. If you're out there as a home buyer or you're a real estate professional taking your clients out to shop for homes, having consistent communication with your mortgage professional is an absolute requirement in this environment because the interest rates are so volatile. You know, we saw them dip down to close to 6.4% earlier this year, and now we're talking about over 7%. That's a wide range. And as the interest rate goes up, that can affect buying power. Now, if you're not maxing out your qualification, if you're not throttling it 100% to the max, you could be good. It just means that from a personal budgetary standpoint, that mortgage is now going to cost you more because It's a higher interest rate, higher monthly payment. It's important, it's imperative to continue conversation. And my best practice that I'll share is I always like to stay in the loop ahead of clients going to see a property so that I could prepare the numbers. And before going to see the property, you know what you're getting into. You know how much it's going to cost. You know what your down payment, closing costs, and monthly payment are going to look like. That type of transparency is a necessity as this market is so volatile and competitive, because the market is still very competitive in some areas. Like we've mentioned on previous episodes, there are pockets where there's price reductions. You can negotiate. Where I'm situated in North Jersey, that is not the case. It's still highly competitive due to a low amount of inventory. To that end, I thought it'd be interesting to share with everybody some fascinating data that I came across last week, and that there has been an increase in the average down payment amount for borrowers and prospective home buyers compared to last year. So right now, the current down payment rate is around 15%. So even though you can put a minimum of 3.5% down for an FHA loan, or 5%, in some cases, if you're a first-time home buyer, 3% for a conventional loan, well, if you want to be in the game, what we're learning here is that 15% down is the average, and that's a rather stark increase for down payment requirement for would-be home buyers to be competitive in this market. It was 10% down just a year ago. So that's quite a bit of a jump. Now, you could take into account a number of different things, like people who are selling their home and then buying a new home, increasing their down payment because of increased equity, because they're selling their home for more money. That could be a function. Or because it's been so difficult for so very many people to try and actually get an offer accepted. Well, the longer you're shopping for, if you're managing yourself prudently financially, you're putting more money away. And that means you have more money to put toward your down payment. So if home ownership is a goal, continue to save money, because if you can supplement your down payment, it's now being proven in the numbers that a higher down payment is going to give you a higher likelihood of success when you submit your next offer. This was a record annual jump, actually, and this is the largest jump since April of 2022. So we still had a low-ish rate environment that started creeping up then, but for our purposes right now, more down payment means, well, if you have a higher interest rate, you're not borrowing as much money. And so that can help from a monthly standpoint. For consideration, think about it like this. You had a median down payment amount now of $55,640. And that's a 24.1% increase from $44,850, which was a year ago. So this extra down payment is becoming more common. And part of the reason why is the interest rates, but also because of competition. If you're competing out there and there's maybe cash offers, you need to show that you've got a significant down payment to look more appealing to sellers when your offer gets presented. Speaking of cash purchases, if you recall from our February update from the National Association of Realtors existing home sales data, that was 34.5% of transactions in February. So all cash transactions are a threat. If you are a prospective home buyer, particularly a first-time home buyer, where you don't have a ton of money to put down and be competitive from that standpoint, cash is more than a quarter of the sales, more than a third of all of the sales that are happening right now. The competition in the market is particularly fierce, and maybe the cash will be around for a while, or this could be an indication that maybe over the next couple months, those cash, we may see a peak, and then the all cash transactions start to dwindle down, and now that opens the door for prospective home buyers, and particularly first-time home buyers. There are a number of disadvantages in the market right now because of this. Not only just the cash, but also because there are investors purchasing property, whether it's to purchase property to flip it or to purchase it and hold on to it in a real estate portfolio, get income from the rental income. those buyers that are out there are also a threat to the first-time home buyers and anybody looking to purchase for their own needs, for their family, primary residences, or vacation homes and second homes. There's also a widening wealth gap because so much of the average American's wealth is tied up in real estate. As real estate values rise, the average household wealth in America increases. But if you do not own a property yet, you're at a disadvantage, which is why I'm pointing this out. It's a difficult pill to swallow that this is the way that the world is right now. But I'm going to end this all off with a message of hope, okay? This situation is still persisting, but it is not a new normal, not in my opinion. If we still haven't had inflation come under control, then there's still work to be done. And that work that needs to be done, albeit that will take time, that will take effort, and it may be a bumpy ride to get us to the 2% inflation target that we need to so that we can start to see some relief from mortgage rates, that will happen. Have hope and know that that will happen eventually. And if there's one word that I could kind of put all this together with, it's patience. It's going to require patience right now. And for those of you who have been shopping for a while or are real estate professionals out there who've been taking out clients for maybe years at this point, I know that's difficult and I know that's a struggle, but trust me, patience will win out. And when we come to the other side of this, my hope is that we will see a normalized market in whatever it's going to look like. I do not believe the market is going to look like it did prior to COVID. I think this is the new world, but also let's remember, prior to COVID, we had a fairyland landscape. This was a ultra low rate environment for the better part of a decade. And now we have more appropriate rates, more appropriate interest charges. I'm not saying that we should be staying where we're at. I do believe things are going to get better from the standpoint of interest rates, cost of financing, and competition. But as it stands right now, if you can win, go for it. Give it your all. Equity will be your favor down the line because if and when interest rates go down, buying power will increase for a large majority of would-be home buyers, and that will create more demand. There's a lot of pent-up demand, but we're going to talk now about active demand, people actively shopping for a home. That will help to raise the prices of real estate. So if you buy now, you will have more equity in the future. That equity position could be of a benefit to you when it comes time to maybe refinance from your 7% mortgage, if you got it today, to maybe something down in the 5% range, high fives, mid fives. Again, this is just for example purposes. We do not know where these mortgage rates are going to go, but have hope. Things are going to work out. It's going to take some time, but all good things take time. Great things take a great amount of time. Bear that in mind. That is it for me today. Thank you so much for listening. I appreciate you so much. Feel free to reach out to me. Follow the show, like, subscribe. If you have questions, feel free to reach out to me on socials. Text me, call me, email me. All of my contact information is in the episode description. I'm looking forward to giving you a real estate update this Friday. Stay tuned for more, but in the meantime, make it a great week and take good care.